Hello, my name is Jonathan Swift, the Content Director of the Infopro Digital Insurance Division. And I'd like to welcome you to the latest Insurance COVID cast brought to you by Insurance Post and Insurance Age. And today we will be asking the question, what next for managing general agents? Now I'm delighted to say, joining me for today's COVID cast, we have Pat Brice, the Distribution Director at CFC Underwriting, Janthana Kaenprakhamroy, the CEO and founder of Tapoly, Olly Laughton Scott, a partner at IMAS Corporate Finance, and finally Charles Manchester, the CEO of Manchester Underwriting Management, and also chairman of the Managing General Agents. Welcome all of you.
Hi.
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 Hello.
So my first question, I'll come to you, Olly. How would you describe the outlook from the year before COVID-19 lockdown? And has it now changed? And if so, how?
Well, I think it's important to realise that the MGAs exist for a reason, and that reason is that insurers find it extremely hard to innovate. That's across a huge range of businesses. I mean, if you look at Marks and Spencer's, their share price over 10 years is down 50%. So all large companies find challenging to innovate, and that's why MGAs exist, because they're small and they can innovate, and that hasn't changed.
Janthana?
Yes, I think, being MGA today face many challenges. To start operationally is very difficult. That would also largely depend on the level of service that you provide. If you, provide claims handling service, then obviously you cannot be very busy as an MGA, because there's high number of claims that were being processed during that COVID-19. Another point that we also, kind of wanted to raise, that at the moment we are facing this market hardening, so finding capacity and getting your delegated authority renewed is very, very difficult. Not to mention that investors are not investing at the moment. So if you are kind of early stage MGA or you need external funding, then obviously this is very challenging for most MGAs.
Pat?
So I think it depends if you accept the premise that the outlook's different for MGAs versus insurers or carriers, really. In that, really, at the start of the year, depending on the sector that you're in and the kind of business that you're running, the outlook was probably pretty bullish. If you're in a line of business that was seeing some growth, and you were already, your distribution was looking good and your partners were lined up, then you still should be fairly good. If you've been disproportionately impacted by COVID, if you're in a line of business that's been disproportionately impacted by that, then I think life starts to look a little bit tougher. But generally, the market's hardening for everybody. The pressure on making the best use of capital applies to absolutely everybody. So I don't think it's just about who's really good at what they do. So I think it really depends on sort of your overall business model and whether that's effective and different enough to be successful going forward.
And finally, I'll come to you, Charles.
I guess Pat's right. It's a case of what lines of business you're in very much. The market in some lines of business had hardened dramatically, and I think particularly those that were the focus of the Lloyd's remediation exercise. So if you're an MGA specialising in marine cargo or professional indemnity or that sort of, or marine hull under that, you will find that the market has hardened quite a lot, and that has leaked into the company market. And so at the beginning of the year, there'd been about 18 months of hardening in that direction there. I think there was also some momentum building up anyway of hardening in other lines of business. And so, yes, capacity was beginning to become scarce for certainly some of the MGAA members that I've spoken to. But Pat's absolutely right. If you've got partners lined up and rates are going up and you've got distribution, then happy days. Of course, partners can change their minds and times change and the faces of partners change. But if you've got all your ducks in a row, then the beginning of the year would have been quite a good point in time for an MGA, I'd have thought.
Yeah.
But it had its challenges.
Yeah.
And just to add to Charles, by the way, he made very valid point about, which line of business you are in. Obviously, like if you are in events or travel industry, you will see that finding capacity would be very difficult. And if you offer business disruption, you're going to see a very high number of claims being raised. Whereas, if you are in mobility offering insurance for delivery drivers, then you may see your business booming.
Can I ask, Charles, you touched on, I suppose, on the hardening of the market. Do you think there is a very real possibility of a capital squeeze happening as insurers and carriers look to use their balance sheets to underwrite their own branded business rather than delegating to MGAs?
Well, the answer is sort of yes. Although, certainly now post-COVID, as the market's hardening even more, logically in a hardening market, then capacity providers historically have done that. And that will be the case for traditional capacity providers, certainly the smaller ones. Of course, MGAs are supported by a wide array of different mechanisms of
I think we might have lost Charles there.
Yeah.
Perhaps Olly.
I was going to say that the last 5-6 years we've seen a number of MGAs increase by 15%, and that's been a very steady rise. And I expect what we're going to see is that we will see a few casualties in those who are not making great returns for their underwriters. And I think it'll be very hard to start up new MGAs. So I think in the short term we are going to see the numbers flatten or possibly decrease. But I still think in the long term the prospects for MGAs are extremely strong.
Janthana?
I think, you have to think about which product line and which market segment you are in. Obviously, we offer on-demand insurance for freelancers and micro SME, and, which require high operational efficiency. And traditional players is not currently competitive in this aspect. And this is where I'm not too concerned about the competition from new entrants and also traditional players. But I am, however, concerned about the capacity to be able to offer on-demand product in general, and also the commission rate that we, it seems the market seems to indicate that there may be a significant increase in the premiums, but at the same time, the commissions may actually be a reverse, which is reduced significantly. And as a MGA that also have distribution channel, it costs a lot of money to acquire customers, as you know. So that's a bit of a concern.
Charles, we'll come back to you now. Sorry, we lost you there for a second.
Sorry about that. I was just making the point that there are now reinsurance players that either directly through group companies that have a license, a primary license, or through supporting a fronting company, do quite often now participate in the MGA space. And that's particularly relevant because the reinsurance market is suffering a real squeeze. And they're far more anxious for top line, perhaps, than primary insurers are at the moment. And Janthana is absolutely right. Commissions are under pressure. But I think when you start off life as an MGA, one has to know that there is a cycle in insurance. And I know that over the last 20 years, people have often said, is the cycle dead? And deep down, we all know it's not. And when things change, then obviously commissions and capacity are under pressure. But there are ways around the capacity, but you can't have it every way. If premiums shoot up, then you can't expect commissions to stay at sky-high soft market levels. And so you've got to be prepared to compromise. And the MGAs that have added real value and are able to do that negotiating are the ones that will thrive.
Charles makes an interesting point about. Charles makes an interesting point about reinsurers getting involved, and we would say that the reinsurers are becoming more like insurers, and insurers are becoming more like reinsurers. They're coming closer together, and that is the space that's been created for the MGA.
Pat?
Yeah, I mean, all of those points I completely agree with. I think, so I've sat on both sides of the fence. I worked at a major insurer, ran a division there, and I backed MGAs in my time, and in hard and soft markets and challenging classes. And I know the process they go through to decide what to back, either with their own products or whether it's an MGA or a third party. And it's rigorous, and you have to build a story. And it's all about basically bidding for the capital to get the best return. So if the MGA's got a really good story, if they can prove that they're good underwriters, if they can prove they add value through distribution or technology or a combination of the two, or a particular underwriting expertise, then I think you're fine. I think that the biggest challenge will be if you're for want of a better phrase, if you're a Me Too player, you know, and you were taking advantage of an opportunity to deliver a fairly Me Too product, which was fine to a point. I think that's where the struggle will be. I think as long as you've got an edge, and as long as you've got a good story, and you've got you know, a network of partners that you can talk to, then I think generally you should be okay.
Can I ask, Pat, I mean, what other significant challenges do you think MGAs face in a post-COVID-19 world? And by the same token, what opportunities have emerged or are emerging?
So I think the challenge, I mean, I just touched on it really. The biggest challenge is you know, what's your differential? You know, where do you add value? So, you know, and it's not just about COVID. You know, Charles referenced the performance management review at Lloyd's, and you know, everyone involved in that market has been under some kind of scrutiny and pressure. All the Lloyd's syndicates had to exit, you know, the bottom 10% of their business almost by edict, right? So everybody's been under some kind of pressure. So that is only going to continue. And you have to demonstrate that you're on top of those. So I think that's going to get even more into sharper focus over the next 12 months. I think probably technology is probably one of the biggest opportunities, and you have to be careful not to jump on a bandwagon here, and everybody kind of throws enormous valuations at insurtechs, and actually it's about smart use of technology. And using technology to make the customer experience better, or to deliver better value to your carrier partners. So, for example, we use a lot of data enrichment to help both the application process, but also the claims process. And people who use it smartly, rather than just thinking technology is the answer, will thrive. People who just jump on the bandwagon and invest in it because they think that's the right thing to do, I think will struggle because they're not really adding an awful lot of extra value.
Janthana, I'll come to you as an insurtech player, I suppose, in some way.
Yes, I think, you know, like our challenges is very universal. So obviously, the capital is one of them. Raising money to expand the business now is difficult. Apart from that, we've got, you know, capacity. Obviously, it's an issue for on demand, because if you look at how many insurance companies who would like to take on demand insurance risk, it's much fewer than it was like 2 years ago. And also operationally, not from the technology standpoint, because obviously we are an insurtech company, so we offer SaaS solutions for the students. Now, the technology is not an issue yet. It's just more like the fact that the number of customers that need to speak to us becoming increasingly higher, because, you know, like during COVID-19, there were a few customers that buy certain products that felt like they're not able to claim, and other, as we expand our product range within the economy, we find that some of the group of professionals provide more help from broker. You know, we've got, you know, some customers who may not have, who may not speak much well, but need additional support in terms of getting the right cover for them. So things like that add to our operational burden.
Charles?
I think there's a few, there are some extra hurdles now post-COVID. An obvious one is E&O insurance for MGAs, where those MGAs that might have an exposure on their books to COVID, on their underwriting portfolio to COVID risks, particularly business interruption, travel insurance. They will have to engage very early with their E&O insurers. Many of them have pulled out of the market. And there are quite a few of our members. It's no different for insurance brokers either, come to that. Quite a few of them have seen capacity providers pull out of the market. And I think they're going to need to get into the market early to get terms and engage with their brokers or insurers to let them understand, particularly if they're not that exposed, that they aren't exposed. And the MGAs that deal directly with customers and offer lines of business that might be affected by COVID will have the biggest exposure. And also the MGAs that have drafted their own wordings, where they then have disputes with policyholders as to whether they will pay. They're much the same in exposures as insurers have, but remember, MGAs are custodians of their capacity providers' capital, and the capacity providers will ask them to answer for it if they have been negligent. And certainly some of the products that have been in the press have been written by MGAs. Most haven't, but some have. And so that's an area of problem. I think some MGAs whose customers are out of business will struggle. I mean, if you specialise, I don't know, in entertainment, in the entertainment industry, or in the hospitality industry, then some of your customers won't recover from this lockdown. And there's a good proportion of your business that might simply disappear. And that would be a concern for the affected MGAs. The reality is, though, that I think most MGAs, certainly most of our members of the MGA8, do appear to have solid books of business and do appear to be relatively unaffected by COVID. The consequence being that they're actually making more money than they were because rates have gone up, provided they've got the capacity providers there. And in some capacity providers, there's an almost febrile kind of atmosphere about COVID, because at this stage, we don't really know how it's going to impact claims other than the business interruption and travel claims. But how is it really going to impact employers' liability insurance, for example? White collar business used to be seen as low hazard. Is it still? How is it going to impact professional indemnity for building contractors with all the delayed projects? How is it going to impact freelancers in insurance? Because a lot of them are now being forced to become, they're either losing their work entirely or they're being forced to become employees. And so there's all sorts of impacts that we can't really predict at this point. And I think insurance, on the whole, we're very lucky, partly because it's well paid and partly because it's tremendously resilient to economic crises. Whether this one will be a very different crisis, it's going to be deeper and longer potentially, but it's arising from different causes to most crises. And so it'll be interesting to see how quickly things rebound and how many of our customers are there to buy insurance or aren't.
Yes, I would say that in the short term there's going to be significant challenges, but in the long term I think it's a very positive for MGAs. There's nothing like a crisis to drive change, and MGAs are much better at taking advantage of change than the big insurers, who are much more flexible, can't deploy technology. So I think we will see in 3 or 4 years' time, we'll look back at COVID and say that gave the MGA market a real fillip.
Well, I think you're right. And anecdotally, talking to other MGAs and to brokers, MGAs have risen to the challenge of lockdown, and it's almost been business as usual seamlessly all the way along. That's not, from what I can gather, entirely true of insurers, although they'll say that. My understanding is that there have been some issues. And also, not being funny, but working in an MGA environment, they're on the whole smaller than insurers. And the kind of people that work there are more entrepreneurial. than the kind of people that work in a sort of 300-year-old insurer. And I'm not referring to Lloyd's here, but I'm talking really about what we used to call the tariff officers. And they're going to struggle getting the morale and keeping the morale and keeping the momentum going with their staff, much more so than the small, agile MGAs.
Yeah.
So I think brokers are getting a great service from it.
I was going to say, Charles, I think a big opportunity for MGAs in the next couple of years is attraction of talent, which was always, we always attracted the more entrepreneurial and more dynamic individuals. But I think given that some of the major players in the industry will go through a period of introspection now, I think there's a really good opportunity for us to attract more big hitters into our industry, and they can see the opportunity now.
Yes, and just to add to our the panel speakers around opportunity, I think as an MGA offering such solutions, we have seen a higher number of participants who would like to adopt the new systems and also, like implement a more cost-efficient process. We certainly have been contacted by a number of insurance GAs companies for that, and also from the kind of distribution side. I think that rightly to your point, Olly, Charles, about like if some business may die out, but that also means opportunity for new business to start, and that new business, luckily, for newcomers, means that they don't have that brand loyalty. They haven't either had insurance with certain companies, so they would be more open to get insurance from different providers. So that's certainly kind of a nearly open new opportunity for new entrants to enter the market.
So on that kind of subject new entrants, Olly, do you expect your graph you showed me earlier to show a continual kind of growth in the number of MGAs?
Yeah, I think there will be a continual growth. It's 15% up in 5 years. That will continue, but I suspect there will be a bit of hiatus for this year. I think it'll be very hard for a brand new MGA to come along when the market is so dynamic. So I think we will see a pause. As I said, in the long term, I'm very confident the MGA market will continue to expand, and the market is going to be changing much more rapidly in the future, and that's going to create the ideal conditions for them.
Okay, it's always good to end on an optimistic note. So I'd like to thank my panel of Olly, Janthana, Pat, and Charles. Thank you all for your time.
Thank you.
Pleasure.
Thank you.
Good to see you.
As I mentioned at the start, this is Insurance Codecast brought to you by Insurance Age and Insurance Post. If you'd like to subscribe or register for either title, then please use the tab in the banner up here. But until the next COVID cast, stay safe, everybody. Cheerio.